Ladies and gentlemen, good evening. Tonight I want to take you through a landmark deal in the hospitality and real estate world, a deal that signals strategic ambition, industrial scale, and real financial impact. I'm talking about Pandox AB's acquisition of Dalata Hotel Group plc. In an era when hotel portfolios, real estate assets, and operational mastery matter more than ever, Pandox has stepped up, and the implications are powerful. Pandox AB, a Swedish hotel property investment and ownership firm long active in Europe, has officially completed the acquisition of Dalata Hotel Group plc, an Irish-based hotel operator owning and running dozens of hotels under the Maldron and Clayton brands. MFN. The deal is a telling move. It reflects Pandox's ambition to reinforce its leadership among European hotel property owners, deepen presence in the UK and Ireland, and extract value through high-quality hotel properties. MFN. Let's talk about the scale. The total transaction value amounts to approximately €1.7 billion, of which roughly €1.4 billion is the acquisition price and around €300 million represents Dalata's net debt. MFN Pandox estimates that the rental income from the acquisition will increase by about 1.2 billion Swedish kronor annually and cash earnings will rise by roughly 450 million Swedish kronor per year, which corresponds to around 2 Swedish kronor and 30 per share and an increase of over 20% on a rolling 12-month basis to September 30, 2025. MFN. Why does this matter? Because it is not simply about buying hotels, it's about buying assets that contribute immediately to earnings, with value creation baked in. The strategic rationale is clear. Pandox's CEO, Leah New, states that by acquiring Dalata, Pandox strengthens its position as the leading hotel property owner in Europe. The acquisition gives Pandox a high-quality portfolio of profitable hotels located in robust markets like the UK and Ireland, markets that remain dynamic and attractive for hotel real estate investment. MFN, also important. The deal is designed so that Pandox retains the ownership of the prime hotel real estate, especially 31 investment properties in the UK and Ireland, while the operating business of the hotels, the management and lease side, will be taken over by Scandic Hotels Group AB under a framework agreement. Scandic Hotels Group. This separation of property ownership and operational business is a hallmark of modern hotel real estate strategy. From an investor and financial analysis lens, there are several key takeaways. First, scale matters. By absorbing Dalata's portfolio, Pandox rapidly enhances its footprint and influence. Second, earnings accretion is built in. The numbers point to meaningful incremental rental income and cash earnings. Third, geographic diversification and market strength are enhanced. The UK and Ireland hotel markets remain attractive when leveraged the right way. However, as always in deals of this size, challenges and risk remain. Integration of assets, alignment of lease and management contracts, and execution of value creation initiatives, such as upgrades, repositioning, and revenue generation improvements, will determine whether the deal delivers its full promise. Pandox will need to ensure that the separation of the operating business to Scandic is smooth, that the leases and revenue-based lease agreements are favorable, and that the hotel real estate can continue to perform even in varying market environments. Also, worth noting, Dalata's shares were delisted from the publicly traded markets, Euronext Dublin and the London Stock Exchange, effective November 10, 2025, following the acquisition becoming effective on November 7, 2025. Investing.com. This marks the full transition of Dalata from a standalone listed company into Pandox's ownership structure, closing the deal and enabling the next phase of strategy to begin. In summary, Pandox AB's acquisition of Dalata Hotel Group plc is a strategic move with depth, scale, and clear financial benefit. It is not just expansion for expansion's sake, it reflects a thesis of owning prime hotel real estate, capturing rental income, signing favorable leases, and leveraging operator partnerships. For the broader hospitality and hotel real estate industry, it signals that consolidation, geographic expansion, and asset optimization remain central themes. For investors in Pandox, it is a moment of amplified potential and higher expectations. As we watch the hotel real estate sector navigate post-pandemic recovery, macro uncertainty, and changing consumer behavior, this deal offers a rich case study. It asks, who owns the properties, who operates them, how are they financed, and how do they generate returns? Pandox has answered many of those questions with boldness tonight. Thank you for listening.